a lot of our clients started off younger, growing businesses, and they've developed with us. They're now at a stage where there's big profits sitting in their companies or trusts, and they're going, well, mum and dad, husband and wife can't take it anymore. Kids aren't old enough to get a distribution through the family trust, but you don't want to leave a whole bunch of cash parked in your trading company, which is at risk of being sued, because once again, you've got an asset that is taking risk. So a bucket company. I'm sure you boys have heard of a bucket company before, but effectively we form a bucket company as part of the family group structure. The profits that are in the company get paid as a dividend to the family trust. Family trust then parks the dividend into the bucket company and pays no further tax because these profits have already had 26 cents to the dollar tax paid on them. So then that money gets out of the trading company, which is taking risk. It's into an investment vehicle or a bucket company, which can be used as an investment vehicle, can make loans and buy property or loan to another investment trust, all sorts of things that I don't need to go into now. But a bucket company, if you have not heard of one, if you're looking at your business bank account and it's full of cash and you're thinking, well, hang on, why am I leaving all this cash in there? Talk about a bucket company with your advisor, because we're forming bucket companies every day at the moment for our clients, and they're going, well, that's a fantastic way to save tax. So again, that same example of the sole trader of, not needing to have an extra 100 grand of taxable income in mum and dad's name or husband and wife's name means that 100 grand taxable income can go to the bucket company and sit there until you're ready to use it at a later date.
So excuse my ignorance on this, but the bucket company doesn't get taxed because it's already been taxed. So I thought whatever the profits are have to be distributed through to the mum, the dad, and let's say to the bucket company. But what you're saying is that actually it's already pre-taxed.
So if you've got a company that made 100 grand profit, it's going to pay $26,000 tax on its 100 grand profit.
Yes.
It's going to leave the $74,000 remaining in the bank account.
Okay.
You take that 74 up to the family trust, down to the bucket company's bank account.
So it just sits in the company's bank account, and that's pure.
No more tax.
How's that viewed? As income or just as?
It's distribution. It's a distribution of income, but it's already got the 26% credits on it because it's already paid $26,000 tax on the 74,000's been franked. Yeah, fully franked.
They're on the same tax rate, so there's
same
no
tax
more
rate.
tax.
Yeah,
no
more tax.
But then each year, so that 74,000 is now available for that company to use to invest in something, to buy something, to become an asset holding vehicle. And any of the profits that are generated on the 74, you'll pay tax at 26% in that new investment vehicle. What it's doing is it's separating that money out of your trading entity though. And you may loan that back. I mean, we've seen clients that then use that to loan it back to your trading company, but secure it under a PPSR, which means that in the event something does go pear-shaped, you're getting your money back first. Because business is risk.
One more question. Does that bucket company have to be a beneficiary of that initial trust?
Yeah. So if directors of one, directors of the family trust or the trustee company, and it's definitely in the same family group. Yep. So that bucket company, once it's formed, as long as there's a connection between the shareholders and directors, that becomes a beneficiary of the trust.
So you can have husband, wife, and bucket company as the three beneficiaries.
Correct.
All right, one more.
I didn't know that.
One more. 100 grand in the bucket company. The next year, company doesn't do so well, the original company. There's not much income to be distributed. What happens with the bucket company? Can you just distribute that back to the individuals at that time?
Yep. So you make sure that depending on who the shareholder of that bucket company is, but imagine it's the same family trust or another family trust, that bucket company decides to pay a dividend.
Yes.
It pays the dividend out and then it goes to
the individuals.
the individual beneficiaries who now, the following year, have a lower tax bracket.
Yes.
So then they can get that money out and effectively may not have to pay any top-up tax at all on that money because their tax bracket will be low enough to not cop any extra tax.
Love that bucket. Dick, I know you're going to
I've got one more question. Is it, we're talking about tax planning, so if you know that's going to, if you know you're going to have a tax issue, call it April, can you set that bucket company up May?
Do it now.
It doesn't have to be set up from the start of the fin year?
No. So it's all about, so again, great question though, because you set that up now. When you do your distribution minutes for your family trust, that is hands down paramount that you sign off your distribution minutes before 30 June 2021 or before 30 June each year. So when you have a family trust, one of the sticking points, and I think there's a reason a lot of accountants get a bit funny about having family trust because there is a lot of management involved and making sure you do it right. But if you've got a family trust, you must declare where the income is being distributed. You can use percentages, you can use exact figures. So for example, partner is going to get 20,000, I'll get the remaining income. And you can word that on the trust distribution. So the first $20,000 of income that hits the family trust goes to partner, all remaining income goes to me. So that you can word it like that. Or you might say 100 to Nick, 100 to Jace, 100 to Marty, balance to Josh. So you have to be specific about where the money's going. So in your example, you can form the bucket company now, which will become a beneficiary. And you may decide that between you and Alicia, there's a sum of money. And then you'll say after the sum of money, the balance will go to the bucket company. And you'll sign that distribution minute before 30 June and it'll get filed away. And when your accountant prepares your taxes, they must follow that distribution minute. And that's why tax planning is so important and why we're meeting all the clients now. If we don't do that, we're making it up. We're going, oh, what do you reckon? Should we just do 50 to you and 50 over there and 20 to the bucket and we sign off on it? It's So
is that a certain trust where you could change the ratios as to who's being distributed to? Or is it just standard trust?
Standard family trust. So discretionary trust is the same name or different name for a family trust. So discretionary trust, it's at your discretion as the trustee. If you're the trustee of the trust, it's at your discretion where the money gets distributed to, but you must sign off on that before 30 June.
Yeah.